Hello everyone and welcome to Day Trader S&P 500. Today is March 8th, 2021. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top-ranked stock market timers. And I've been around with Woodson Wave since 1997. Annual subscription, Fibonacci $233 a year. Monthly subscription, Fibonacci $144 a month. Daily reports. We put out one midday today. We did the same Friday. We put out two on Friday. I'll be on vacation March 20 to 27th. I don't think we'll be able to do any reports during that time. Before I forget, we appreciate you guys patronizing our channel. Please remember to hit the subscribe, the reminder bell, and the like button. It does show up. Let me see. Maybe it doesn't this time. Okay. I want to thank you guys. We recently, just a couple days ago, reached 1,000 subscribers. So thank you guys very much. I do appreciate all of you. Okay, we've got a few things we want to cover today. Let me look at the board here. We're going to do the S&P. We're going to look at Tesla again, the Russell, and we're going to look at crude or oil. Okay. Somebody said they liked the long-term charts. Here you go. Here's a long-term for you. This is a monthly log chart, and I'm going back to 1987. Okay, let me count the waves for you guys here. Okay, we don't want that. We want this. Okay, so from the 87 low, this is a 1, and I used to think these were two different bear markets, from 2000 to 2002 and 2007 to 2009. But that's a flat, ABC flat. I can label that for you guys. This goes up to the January of 2018 high for 3. I don't know why that's not going. And there's our expanding triangle 4 and a possible 5 there. This is obviously the wrong degree. Let me clean that up. We'll make that cycle. There we go. Okay. So from the 87 low, we've got a wave 1. We've got an ABC correction here, a flat correction. Okay, the Elliott guideline of alternation. If one correction is flat, the other one is, well, they don't run the two the same, okay? So in this case, we got a triangle. We got a flat for wave 2. We got a triangle for wave 4. And there is our wave 5. The question is this 1 of 5 or is this 5? And I need to move that up there. There we go. Okay, so that's your long-term look. By the way, while we're here, let's just say the S&P is going to correct this move. Let me see if we can get Fibonacci retracements on there. I remember that 87 crash. That's what got me excited and involved in the market. Okay, let's do a retracement. I remember that was 16. Well, that was the Dow, but let me see if I can get close here. Okay, let's go up here. See, that doesn't seem right, but that's the previous. Well, that's the second wave there. We're looking at 2649 or 50, basically 2039 and 1608. Wouldn't that be fun? Okay, somebody asked me about that the other day. What are we correcting, or what is the S&P correcting? And that's what you're looking at if it's the 1987 low. But first things first, I like to work backwards. Like, we'll work backwards from this fourth wave. And that's what we did during this decline over here, is we were working backwards instead of from here, working from here. Okay, so we'll go from that fourth wave low. Okay, and you can see we've got a 1 up here. I don't have it marked. A 2, a 3, another flat correction, and a 4. And then you can see wave 5. Let me clear this off. Remove all those, and let's just say the S&P is going to correct the 5-wave advance from the March low, and here are our targets. As you see, we're at 3280, 3071, 2861. I got the 786 in there. I haven't used it for years, but since the S&P is going to it on its upside corrections, I've included it in my retracement levels. Okay, So you can see here we've got a 1, 2. Well, here, let me label these for you guys, okay? Let me get out our, okay. And this is a flat correction. So we have a 1 up, and that was really steep. I never liked that because it looks like a 3, and the 3 looks tired. And the 4 and 5 there, and that is obviously not cycle degree. We're going to call that minor degree. There we go. Okay, so that's our last 5-wave advance. And if you want to see what we're doing there as far as corrections of that, last 5-wave advance, this is not going to be to the point, but it's going to be close enough. Let's get rid of this one so there's not too many lines in the way. And that last 5-wave advance from the October 30th low puts the corrections at 36.74, 35.91, 35.08. Okay, and if we get past those, then we're going to look at something bigger like the March, and then we'll go back even to 09 and then 87 if required. Okay, and then we want to look a little closer here. Okay, let me get to the next S&P, and that is from the high of February 16th. You can see our 1 down, our 2 up, and a series of 1s and 2. 1, 2, 1, 2. And these retracements, if we can get into them here, they're well, we've shown them before, but they're all like 786. You can see the move up and down. I'm sorry, down and up. It just retraces. We got another one today. That's what we put the midday report out. This one is a 786 of that. Let me see if I can get these retracements to show up. So this is a 5-wave decline, as you can see. And if I can get that to go there, you can see there we are, right at the 786. So midday when we hit that, we put out a report. This is a clear 5 waves down. Here's where you can see that 3rd wave extended. That's where we had the wave 3 of 3 on a 5-minute bar, and it broke our make or break. But our make or break on this one now is that high, which I think is 39.14. Yeah, 39.14, okay? Because the second wave cannot retrace more than 100% of the first wave. And this is a series of 1s and 2s. 1, 2, 1, 2. So we should expect this to go down. And I'm going to look at our turn dates here. Well, you can see our target here for this internal 3rd wave. 3 equals 1 at 36.68. Let me get down a little further, and it equals 1.618 at 35.69. And this larger wave count here is 1 down. Let me just mark that for you guys, okay? So no one is confused. Okay, there's 1 down, there's 2 up. 3 would gain equality with 1, but it already stopped past that, or it went past that. So 3, the next target is the 1.618. Now just lay the 4 and 5 out here. Okay, so 3 gains a 1.6 on a larger wave here at 36.53, and a 2.618 at 34.92. We don't have to worry about the 3.6 and 4 point yet. We got to see this break through this low here for validation of the 3rd waves. You can see this is 1, 2, 1, 2. So we got 3 of 3. And we can look at that breakdown as it occurs. We'd like to see this high hold, which was registered today at 38.81, but honestly it's this 39.14 is our make or break. And then for the bearish count overall, we need the all-time high of 39.50 to hold. You would think that if it breaks above this wave 2 high at 39.14, that 39.50 is just on deck. Okay, so far so good. It's still on. I want to look at these Fibonacci time spirals. And as you can see, I started this one on September 2nd, very much like the one in 1999 when I had it in August. I know it was August 24th, and it caught the highs for the next 7 years into 2006, but it wasn't the all-time high. The all-time high was in January of the next year of 2000. So this one's starting the same way. It starts calling the alternate highs and lows. I won't go into all the detail. There's a little bit of slippage in there, but the next January 26th, interestingly enough, should have been the high, but that's when they didn't allow GameStop to be bought, which was beyond me, because there would have been brokerages that would have failed, banks and clearing firms that would have failed if they wouldn't have done it. So what they did was they should have stopped selling too, to make it fair. So those who were long really got screwed, but that's when the market should have topped. But what I found is when they manipulate the markets, like they obviously are, they're human, so they manipulate them in Elliott waves and Fibonacci multiples. So here we go. The next all-time high is right here on 216, and you can see our turn date here. That was a pretty big slippage of plus 21. The next turn date in the sequence is April 23rd. But you can see from that alternating, once we got to the wave 2 low there, you can see this turn date has called the last three highs. So we'll see what 423 brings, which brings us to the other scenario, the other Fibonacci time spiral. There's a one coming from this high. You can see that this one called, there's no slippage so far. Okay, the first turn date in the sequence, 8 days, was 224. Bang, we caught a high. And then the next one is 3-1, bang, it caught a high. And the next one is 3-9, that's tomorrow. If there's a slippage of -1, it was today. But look at what it's showing us. It's showing us where to short. It's like, hey, here's a turn date, bang, here we go down. Another one, hey, there's a turn date, bang, we go down. And the moves are are bigger and bigger. Of course, we got a series of lower highs and a series of lower lows. You can see our targets there. I think this one, yeah, this one was done today. And this was the other, I don't know how many it is, retracements. Every one of these is ridiculously at least 618, if not 786. So they're running everybody out before they take it down. If people have shorts and they have stops, they're getting all the stops out, they're taking their money, and then they're taking it down. It's like, you were right, but too late. Now you're out of the market, okay? So tomorrow is 3-9. We'll see if this makes a lower high. We'd like to see it stay below that March 1st high. So it may go up a little bit, or the thing may have got a slippage of -1 day today. We'll see how that goes. And again, I want to point out, if there is a crash, there's no guarantee that there is, but the crashes always occur 55 Fibonacci days from the high. If you look at the other wave one here, from that, here it is, we had 55 days, was October 27th. It had a slippage of +3, but that was the low. It did not crash, but it marked the low. And look what it's done from that low. So you can look for a low to be registered on October 30th. Okay, so we're looking at, let me get back to the other one. We're looking at the moves from the all-time high and the Fibonacci time spiral there. So we should be marking another one of these if we didn't already. We'll see what the futures do. We'll see how the market goes tomorrow, and we'll look for this thing to turn south. This is marking lower highs, consecutive 3 in a row. All right, we'll see what the March 22nd and April 12th bring. But for now, we'll look for this thing to top and then move down. Okay, what else did we want to get into here? Yeah, I wanted to kind of look at Tesla again. I don't know if anything's new, but I left my wave count up. You can see that fourth wave triangle, fifth wave thrust out. Boy, it sure looked like it was going to go to the moon, like everybody thought, but it stopped at 900. And you can see, just like the S&P put in a beginning diagonal triangle, that's where wave 4 overlaps wave 1. That's what Tesla did. It started to mirror the S&P. There's the first wave down. There's the second wave up. You can see the third wave here. 5 waves in between there. A wave 4 up. And it looks like we've got 5 waves down for 4-5 for wave 5. So the way this is going, this thing could extend. You never know. But Tesla went from 900 to, what was that low there? That was 547. And that was registered on the 5th, which was last Friday. So we'll see how this goes. This should be an ABC, but let's get a retracement of that just to see if that declines over, because I'll tell you what, that's the first or A wave, and the next one will be a third or a C wave, and it'll at least gain equality with it. So here we are, we're looking at a move up to, if this is the low, if this is the end of that first wave, you got a 1, 2, 3, 4, 5. So that's 1 or A. So the next will be 3 waves up, and we're looking at Fibonacci retracement to 677, 720, and 763. Once that goes in there, we can get a little ahead of ourselves. Let's just say it goes to the 382, and we have no idea how far it's going to go. But let's do an extension. Okay, from the 900 high, we'll go down to that low there, get on it, and then let's say it goes to the 382. Okay, this is the next wave that I want to trade. Okay, and that would be the C or the 3 wave, and we're looking at, wow, 312, and that's if it just gains equality. Can you imagine Tesla going from 900 to 87? I could, because it went from nowhere, it went through the roof. But we'll see. The other thing is yeah, we should get a 535. We've got the first 5 down. So let's see how it plays out. There you see I was looking for wave 5, this wave 5 here, to get to 1050, and it didn't. So Tesla's in trouble. Tesla's leading the way. The tech's leading the way down. NASDAQ and the tech always lead on the way up, and they lead on the way down. Okay, and here is the bigger picture. Yeah, I wanted to show you guys this because this thing started back in 2019. We got a 1, 2, 3, 4, 5, and if we're looking at a 382 correction of that, by the way, this bar is wrong. I don't know why they got that in there, but that daily bar is not that big spike. It's really down here. Okay, but if we're looking at that, it came between the 382 and the 500. Normally it'll go to the previous 4th wave of 1 lesser degree, and you can see where all the accumulation is right here. So I wouldn't be surprised to see this go in between the 50% at 474 and the 618 at 373, the 4th wave of 1 lesser degree. Okay, that's what we're looking at with Tesla, both the bigger picture and the shorter term picture. Let's look at the Russell 2000. Okay, Russell, we go back to the March lows. You can see a wave 1 up, a 2 down, 3 up, tiny little 4, and then a 5. Okay, looking at correction of that last 5 wave advance, we get targets of 2124 achieved, 2055, and 2006. Okay, so that's just this last 5 wave decline. And oh yeah, by the way, I wanted to show you, I already had that in there. This is where the target was for 5. This is where 5 equals 1, and it's 2239. So it looks pretty good that the Russell put in its high back here in February, and now it's doing its correction. So let's just take that correction out, and let's just say that it's going to correct this entire 5 wave advance from the March lows. What are we going to look at here? Okay, we're going to look at a move to, and this isn't to the dollar, but it's close. Look at that right there on, what is that, 18.0 something? They're on top of each other. 18.05, I believe it is, and then we have a 16.36 and a 14.76. And again, previous 4th wave right in here would be a good target. But let's see how this retracement goes first, okay? So Russell looks like it put in 5 waves, and it put a top in February, just like the S&P did. And gold looks like it topped in August, and Tesla topped in, was it January? Was it January? When did it top? Back here? Yeah, January 25. So everything's rolling over. Okay, let's look at oil. All right, here, I remember back in May, oil went negative. So I don't know what they got here. They have a 0 price on that, but you guys might remember that was the futures contract. But we have a 1 up, a 2 down, and this looks like 3 up here. Okay, I'm sorry, 1, 2. It would go all the way to here. All right, we're looking at what, 77? Okay, for the next wave up. And here we've got a 1, 2, and then there's where 3 equals 1.618 of 1. We got 2 different degrees of trend here, so let me do some numbering for you guys, okay? So this would be 1, this would be 2, 3 would be up here. We're going to put 4 and 5 here just for kicks, okay? And then within here, we have a smaller degree within that wave. We have a 1 up, a 2 down. Looks like 3 would have been here. Looks like it, boy, that's hardly a correction, okay? If we want to call that 3 and then 4 and then 5 up here, and let me get that to be a lesser degree. We don't want that at minor. There we go. We get it 1 less. Okay, 1, 2, and then we've got a 1, 2, 3, 4, 5, 6, 7, 8, 9. That's it right there. That was hardly a correction for 4. Okay, we're doing this cold, so let's see what it was. Maybe it was a 236, which I don't keep in like the 786. So, and that 2 is off. Well, let me put this here and go up there. There we go. There's the 382. Let's add in the 286. Let's see what we get here. Any day now. Maybe that is. Let's get back. Maybe I didn't get that good. Let's get into settings. Not wanting to come up. It may come up here soon. But that was hardly anything. But we're looking at 76 to 77 for oil, for crude. Okay. Here we go. A little delayed reaction, but it came up. Okay. And look at that. It did hit the 236. I don't use the 236 or the 786 very often. I like these 3. They come up so much more often and they're very common. But in this case, that's what it looks like what happened there. Okay. So we may be marching on our way to 76 or 77. Okay, so that should about do it. Remember, that's what we're looking for. The next turn date in the sequence is March 9, which is tomorrow. We'll see if it topped 1 day early, or if it does, go ahead and make a lower high on 3.9 and then look for another decline. These are big declines off these turn dates. Okay, until next time, take care, everyone.